A couple of months ago, I added Duolingo to the Asymmetric portfolio, did a spotlight article. That's really how I start coverage on a company. And the stock has absolutely cratered since then. But you can see in this chart here, shares are down 68% from their peak. Now, the question is that deserved or is this a buying opportunity? Duolingo really reminds me a lot of a lot of companies in the Asymmetric portfolio. If you look at companies like Coinbase, Spotify, sometimes the market throws great companies out with the bathwater. They question things that don't really need to be questioned. Like, are people going to use Duolingo for languages, or are they just going to start using artificial intelligence? I don't think that's going to be the case. People still need to communicate in the real world and not just through artificial intelligence. That's the long-term story, is that this is still an education platform. Their numbers are improving significantly. There were some questions after the most recent third quarter conference call, but those were answered explicitly by management. And the answer is exactly what you want to hear if you are a long-term investor. So today I'm going to dig into exactly what I think about Duolingo. If you want more from me, check out Asymmetric Investing. There's a link on the screen and a link in the show notes. This is one of the stocks I've started adding to the Asymmetric portfolio, and I may add more in December and in early 2026. So check that out if you want access to that market-beating portfolio. And I'm going to be using Fiscal AI throughout this video. This is just a quick look at Fiscal AI. It's got all the information that you need. You can see all the company statistics right here, great charts. And the thing that I really love about Fiscal AI is all the KPIs. I'm going to use this in the Duolingo video, but just look at something like the monthly active user trends and the daily active user trends. Actually, you can look at this on a quarterly basis. You get these phenomenal charts. These are moving up and to the right. This is exactly what we want to see with Duolingo. So you've got all the numbers, all the transcripts, all the investor presentations, everything all in one place, right in Fiscal AI. Check out fiscal.ai/ASYM. You can get 2 weeks for free and then 15% off after that. So let's first start with what Duolingo does, because I think that's important to understanding the business. Duolingo is, at the end of the day, a learning application. Fun, free, and effective, so you can get started with most of Duolingo for free. They have energy units that you use up as you actually do things in the app. Backed by science, they're adding all kinds of modules. So they added math and chess recently. Chess was actually their biggest launch. And it's personalized learning, something that they say. The personalization part of it goes to Duolingo Max. That's where you can actually talk to an AI and actually get feedback on how you're communicating in another language that you may be learning. The way that they monetize is through paid subscriptions. So Super Duolingo and Duolingo Max is really where they're going to make their money. I'll talk about that subscription model and how it plays into their financials. They do have advertisements, they do have in-app purchases, but a vast majority of the revenue is going to come from these ongoing subscriptions. And the numbers for the business are incredibly strong. You can see here, daily active users up 36% year over year. This is the Q3 2025 numbers. On the right, you can see monthly active users, 135 million, up 20% year over year. So actually daily users growing faster than monthly users, and then paid subscribers up 34%. And you can see that this paid subscriber penetration rate is actually increasing. So all these things are exactly what you want to see in the company. If you're building a subscription model, you want to see that take rate, people actually paying you for your product, improve. The way that they're going to ultimately grow long-term is not just being a language application app. I think where the market is getting this very wrong is that they're thinking about this as just language, when really Duolingo is an education app. I mentioned adding math and chess. There's also an application for kids, teaching kids how to read. That's not actually monetized right now, but they're going to add more of those modules. They're going to add more things that you can do with science, with history. There's all kinds of opportunities for them to grow. And I think that subscription value is just going to increase over time. So that's the way that I think about the business, is that where we are today is really just the starting point. 10 years from now, this is going to be application. Maybe you pay $10 a month for it, but you're going to get a ton more value than just learning a language. The financial metrics also really strong. Revenue up 40% year over year. Bookings up 33%. I'll explain why these numbers, revenue is up more than bookings. And then net income. So net income positive, $292 million, and adjusted EBITDA of $80 million, or almost a 30% margin there. Couple things on the revenue and margin side. Most of their sales goes through an app store, either the Apple App Store or the Play Store. So you're not going to get 100% of the revenue. Those applications or those stores are going to take about 30% of revenue. Now, one of the things they've moved towards recently is actually building that direct relationship. The give and take here is that you're not going to have quite the same take rate. If you have to go through more steps to sign up through going directly to Duolingo, you're going to lose some customers along the way, but you are going to generate more revenue over time and higher margins from the customers that you do convert. So management has talked about this a little bit. That's going to be a slow process, but over time, they're going to try to push more people to signing up with them directly. That is an opportunity for both revenue and margin expansion. But like I said, going to be a little bit of a slow burn. Now, I talked about those growth rates, and here's where investors were disappointed in the most recent quarter. It was actually not the results, but their guidance. Fourth quarter guidance is for bookings growth to be just 21.5% to 23.5%. Revenue growth, 30 to 32%. Now, that's solid revenue growth, solid bookings growth, but the growth rate is slowing. That's something that investors are concerned about. If you're buying a growth stock and the growth rate is going from 50% down to 25%, then you got to start asking yourself, how low is that growth rate going to go? So that's the concern. That's the thing to think about. But management was also extremely explicit about the decisions that they're making about that growth rate. We are taking the long view. They're focusing on monetization, user growth, and teaching better across all of their subjects. And in Q3, they decided to shift the balance towards longer-term initiatives. In particular, we're investing proportionally more in teaching better. We're prioritizing user growth over monetization in the A/B tests that get launched. That's the short story, is that they are choosing to grow the business, grow the user base faster, and monetize less. That means that you're giving up revenue growth today for user growth tomorrow. Over time, this trade-off is often a very, very profitable one for companies and for investors. But it means that revenue growth and the net income growth, free cash flow, all of those things are going to be delayed in the future. That's what investors are concerned about. That's why, as you can see here, shares have fallen 68% from their peak in just the past couple of months. Let's look at this on year-to-date basis. You can see shares are down year-to-date, but they peaked in May. Not a lot of stocks peaked in May, but that's exactly what Duolingo did, just dropping like a rock since then and just plunging even in the month of November. But again, I want to reiterate this. The user numbers are phenomenal. Daily active users of 50.5 million, that is a massive increase from a year ago of 37.2 million. That's the kind of engagement you want to see from an education app like Duolingo. So I don't see anything wrong with the operations. It's just the valuation that has changed over the past few months. But that can snowball for investors. Investors can start questioning, what's the future of this business going to be? Remember, even just a few months ago, Google was going to be disrupted by OpenAI. That has changed dramatically in just the past 6 months or so. I think eventually we're going to see the same thing happen with Duolingo. That's why I'm starting to see this as more and more of an opportunity, because you're not seeing a lot of stress in the numbers. Let's go to some of the operating numbers. In yellow, you have revenue. You can see that revenue growth just growing tremendously, a 41% compound annual growth rate. Even if that growth rate falls to 20%, 30% over the next couple of years as they focus on user growth, I think that is a trade-off that's going to be welcome for investors long-term. Operating profit, it is operating profit positive. So this is not a company that's basically spending more than it has to be able to grow the user base. It is profitable. Duolingo is also generating positive free cash flow. Not a ton of free cash flow, but over the past year, about $87 million worth of free cash flow. And the balance sheet is absolutely pristine. $1.1 billion worth of cash on the balance sheet, no debt. They do have leases, so that's something that you would see on the balance sheet, but no real red flags as far as the balance sheet goes. So the business is heading in the right direction. $8 billion market cap on an enterprise value basis, only about a $7 billion enterprise value. So let's look at some of these valuation numbers, because that's where you're ultimately going to see the opportunity. If the market starts to see that, you know what, that revenue growth is picking up, Duolingo is more profitable than we thought they were going to be, that's when you're going to start to see multiple expansion. So let's look at a forward basis. Price earnings multiple 45, not super cheap, but not the most expensive company for a company that's grown revenue at 42% over the past 3 years. Enterprise value to sales, 5.9. Now you're starting to get to that value territory. Enterprise value to EBITDA, just 20. Now you're starting to see where there's real value. Now we're not quite at back the truck up territory, but we are getting to the point where Duolingo shares are getting really compelling. I'm starting to dollar cost average into shares of Duolingo, because I do think that this is a company that can grow their platform significantly, grow the value of that subscription, and then grow that user base. And that's exactly what they're doing. They're taking the long-term view. I think that as they add more modalities, this is going to become a business where the growth trajectory becomes much, much clearer. And the risk you're taking as an investor, and I'm an asymmetric investor, we have limited risk that we're taking. The most that you can lose is the amount that you invest in a company, and the upside is almost unlimited. So the risk that you're taking buying a company like this at an enterprise value to sales of under 6, price to free cash flow under 20, that's relatively low risk for a company that could have 10x potential over the next 10 years. This is the kind of risk reward that I look for on asymmetric investing. I expect to buy shares of Duolingo over the next few months. So find out more about what I'm buying on asymmetric investing, my newsletter. Like I said, link on the screen and a link in the show notes. Love to have you as part of that community. And let me know what you think about Duolingo shares in the comments section below. Thanks for watching, everybody. We'll see you here next time.